The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we got the scoop. All right, we are going to set you straight. I mean, we finally got what's all been in secret and what's going to be voted on. Yeah, hey, Chris.
I thought you were talking about maybe vanilla, cookie dough, chocolate.
No, I don't eat that stuff. You know, I want to buy it.
You eat salmon and haddock
I eat
and
fish. I
yes.
eat a lot of fish.
A scoop of rice. How about that?
Blub.
Yeah, when my commercials come out, you're going to say, "Wow, Esther lost weight." I did. I lost weight again.
Yay!
All right, well, we're going to talk about the two big tax issues that happened this week. First of all, the change in the casualty loss, which affects people that live in Niagara County on Lake Ontario that had suffered the casualty loss due to the flooding and all that stuff. And the second thing is all the tax law changes and the things you got to do to maximize this year's tax deduction so you get the best bang for the buck, and we only got like 9 days left. So 803-0930, 803-0930, star 930 on cell phone. I have Tiffany Fabian and Christopher Fabian here in studio with me. Hey guys, you got your Christmas shopping done?
Yeah, a lot of it. I would say a lot of it. And I was really behind because we were on a vacation up until a week and a half ago. So I really feel like I was a little behind, but I have a lot of it done. I still want to bake cookies.
I did my last thing
the tree
today.
Is up.
My last gift certificate today. I'm all done. I'm done. It's interesting how this whole thing sits on your head. You know?
Yep.
All right. I'm Esther Gulius, the tax lady from EG Tax. All of our branch offices are going to open up when, like the 18th of January?
15th.
The 17th.
17th. And first day of electronic filing is the 19th, right?
Yep.
And I will tell you the biggest tax law changes ever are going into effect, and some people are going to be pretty happy and some people are going to be pretty sad. But the first thing we want to do is talk about people that had suffered casualty losses. 2 days ago, there was a
revenue proclamation,
ruling, right, by the federal government that says this is how people are to handle casualty losses in a federally declared disaster area, of which the flooding in Niagara County was a federally declared disaster area.
Finally.
Correct? Right?
Yep.
Finally.
Yep.
So there's like 4 ways you can claim a casualty loss. First of all, and probably the simplest, is to use what's called a
Safe harbor
election.
Safe harbor election,
Yep.
right? So if the loss to your property, as more or less adjudicated by a
receipt,
a contractor,
an estimate. Yep,
right?
an estimate from a licensed
Is
contractor.
less than $20,000. You can take the safe harbor election and take a casualty loss either on 2016 or 2017, whichever you prefer. 2016 would be better because you can amend the return right away and get the money plus interest.
Yep, and get the ball rolling. Yep.
And so what is it? Are they charging the 10% with the safe harbor?
I know for hurricane victims, they're not. I did not see where they were waiving it for Lake Ontario.
Okay. So if you're in a hurricane area, then they waive the 10% floor that they would charge you against a casualty loss, and they're only making you take a $500
deductible type
against
thing.
the casualty. But if you live in the Lake Ontario Safe Harbor election, there would be a 10% floor. So if your income was $20,000, you have to take $2,000 off of the $20,000. You'd have an $18,000 casualty loss. And let's face it, if you're in the 10% bracket, that saves you $1,800.
And you don't have to itemize in order to do this.
And that's really cool. So
Yeah.
somebody that's a non-itemizer, you get to take the casualty loss without itemizing.
Cool.
And that's a big, big thing.
Yep. That
Right?
big, huge, because so many people couldn't take the casualty because they just simply didn't have enough to itemize.
Right.
And that's not going to be the case.
And anybody that has maybe a second home, a primary home, another home, and you were in the hurricane, then that's another set of rules that just came out 2 days ago. They're going to allow you to not do the 10% floor against your adjusted gross income. All you have to do is reduce the loss by $500.
Correct.
Right?
Yep.
And again, you don't have to itemize.
Correct.
So that's a great big thing. So if you had, let's say you had you had an insurance policy and they said, well, we're going to pay everything but $40,000. You'd end up then with a $40,000 casualty loss limited by $500, and you'd have a $39,500 casualty loss, which is a lot of money.
Yes, it is. That definitely helped a lot of people.
Right. So that's one big thing. Then the second thing is we finally have peeled through the layers of what's really going to go on with the reconciliation between the House and the Senate. One of the things we thought was that alimony was not going to be deductible and was not going to be taxable. That is not necessary. It will be true starting in 2019.
So if you have a divorce that comes
Pending,
into effect,
get it done now.
Yeah.
Right.
If you want to deduct your alimony.
Right. So if you're somebody that's paying alimony, you'll be okay taking it as a deduction. And if you're somebody receiving alimony, you're going to still have to pay taxes on it unless it's after 2019. After 2019, it won't be taxable to the recipient. It won't be deductible to the payer.
Mm-hmm.
Right?
Yep.
And then the other thing is a lot of the things we thought were going to go away, the adoption credit is still in.
That's great. That's really good.
The employer education expense up to $5,250 that they said was going to be taxable is not taxable.
The student loan interest is still deductible.
Student loan interest, which I just didn't understand why
baffling.
they were thinking of taking that away, still into the tax law. Teachers adjustment, the educator expenses, still in there. Casualty losses, which wasn't even going to be an itemized deduction. If it's a federally declared disaster area, casualty losses are still going to be deductible. But one of the things that we did warn people about is that on the 2106, if you're an employee with an employee business expense, that is going away based upon what we can see that's going to be voted on next week.
Yeah.
Yep.
That affects a lot of people, a lot of my clients.
That really does. I can't
14.5 million people.
Yeah. I just can't imagine how that. The other thing is, they were talking about making the sale of the personal residence the first $500,000, which is presently tax-free, which if you own the home 2 out of the last 5 years, they were saying it was going to be 5 out of 8. They went back to the original law, 2 out of 5.
Which is great. That's good.
Which is great, right? So those are just some of the things that are coming down the pike, and that's what we want to make sure. So if you have any questions, 8030930, 8030930, star 930 on cell phone. Remember, this is for 2018 going forward. 2017 is pretty much the same as it's been.
That's right. Just so you can start planning.
Right.
Planning.
All right. And anything that is happening at the office that people should know about?
Well, I know a lot of people are calling again. I'm getting phone calls for people saying they're the IRS. Great Christmas present. I'm sorry, you've just been scammed. IRS does not place phone calls. They only send you certified letters.
That's right. So if you're getting letters that's saying that you owe the IRS money, ignore it. Give us a call. We'll laugh with you.
Yeah.
But they are really good. They sound so good, don't they?
Yeah. A lot of people have been coming to us with audits after the fact, and so we're doing audit reconsiderations. And so the truth is, before they had their audit, they should have really sought counsel beforehand. But now we're doing audit reconsiderations, job expenses, Schedule
Why don't we go
Cs.
to the phones, and then we're going to talk about things that you need to do before the end of the year. We're going to talk about the tax law changes and any of your questions. 8030930, 8030930, star 930 on your cell phone. And we got Joe from Gasport. Hi, Joe. How can we help you?
How you doing? I have an apartment building I pay $17,000 a year property tax on, and my residence is about $5,000. So all that $22,000 had been deductible. Am I now tapped out at just $10,000 total and have to pay income tax on the other?
Actually, it's interesting because initially when they first started talking about all these changes to the tax law, they were talking about itemized deductions going away. What's happened is medical is still going to be in there. Real estate, property taxes, sales taxes, and income taxes up to $10,000.
Right, but your rental property is going to
over and above that.
Yep, that's on its own form, which goes to page 1, so that's not affected.
That's going to be fine. Charity's going to be in there. Interest up to home mortgages up to $750,000 still in there. So most everything is still going to be there except for miscellaneous itemized deductions.
All right, and so did they do anything with capital gains? Because I'd like to get out of the business sometime sooner rather than later.
Capital gains have changed. Have not changed. So if, in effect, the only thing that really has changed is the personal exemption for people, like for instance, if you don't have children, now's the time to have children, because the first, for children under the age of 17, you get a $2,000 child tax credit, which is remarkable. Once they turn 17, off with your heads, you're going to end up paying the taxes. But children are absolutely great, but one of the major things that have changed is the personal exemption. That's been eliminated. So, but pretty much everything else is still in the law except for the 2106.
So as long as you're not a W-2 employee that has business expenses, you should be okay.
Right.
Okay, very good. I didn't know if I have to raise my rents or not. That's why I was wondering.
No, you're good. You're absolutely good.
Very good. Thank you.
Merry Christmas.
Right. Merry Christmas. I'm Esther Golias, the tax lady from EG Tax, 8030930. 8030930 star 930 cell phone.
Yeah.
Yes, ma'am.
Hey, I also wanted to say on January 6th, 2018, we have an open house for our new location in Lewiston, New York, and we're going to actually do a live remote there. So the radio show will be there at Tin Pan on Cayuga in Lewiston, New York. So we're going to have a great time and welcome everybody there. And then don't forget to check out our new app, which is great for bookkeeping and keeping track of all your receipts.
Our new app is so cool.
Yeah.
It has all these little bells and whistles you can do. You can save your receipts. It links to Quicken. I mean, to not Quicken Loans, to
QuickBooks.
QuickBooks. And it has all the, you can make an appointment, tax law changes, blogs, all kinds of things tax related. And as soon as the vote is finalized here with the House and Senate, we're going to put all the tax law changes. Again, those are 2018 going forward. 2017 is pretty much all in stone.
There really were no changes for 17 besides a little tweaks.
All right, let's go back to the phones and we're going to talk to Carol. Hey, Carol.
Hello.
Hey, how can we help you?
Hi, Esther. Wanted to find out about the Social Security. Before, you would take and fill a form out as to what percentage of your Social Security income was taxable. Is that going to be the same, or are we going to pay full?
Yeah, it's really interesting. You listen to them talk about tax simplification. I have to tell you, when I take a look at what they proposed, it's not going to be more simple, and everything that always was, all of the income and all of the computation and all of the ways that it was taxable before has still stayed in place. So your Social Security will be taxable if half of it added to your regular income, and your tax-free income exceeds $25,000 and you're single, $32,000 married, filing a joint return.
So it hasn't changed.
Same way. Yeah.
Right.
Because the form is still there, and you'll be taxed on a portion of your Social Security.
Correct.
No, gotcha.
Right.
Yep.
I've got about a half a dozen of those IRS calls, so there are.
Chris was not joking. Yeah.
Yeah.
They're really
Just
quite
laugh
savvy.
Just laugh at them. They really do sound good, though, don't
Yeah.
Thank you so much.
Merry
Thank you. Merry
Christmas.
Christmas, Carol. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 cell phone. We're going to take a short break. We'll be back with your calls on the other side. Hey, what I like about you is that we get to help you. We just love helping you. I'm Esther Golias, the tax lady from EG Tax, And we're just wishing you a wonderful holiday season. It's such a great time to be with family. We're so, and you know, it just kind of puts everything into perspective. I'll tell you, there is a lot of pressure, though, getting everybody things that you think they're going to like. And I'm going to have a dinner party next Sunday night at my house, and I got to cook, and I'm thinking about that.
Yeah,
but
it's
aside from that, tax
one of
season,
2 times a year you cook.
that I don't cook a lot, you're right, but I'm having to gear up for it. It's like the marathon for me, you know. So I'm Esther Golias, the tax lady, 8030930, 8030930. And so here's the thing. It looks like the House and the Senate have reconciled. And so that's a good thing. And so it does look like the tax law changes are going to go into effect. There are going to be 7 tax brackets. One of the biggest changes is for people that have children under the age of 17. One of the bad things is the personal exemption for everybody's been eliminated, the $4,050. That'll be in effect through 2017. But for 2018 going forward, that's going to be eliminated. You will get instead a $2,000 child tax credit for children under the age of 17, and for other people that are your dependents, a $500 credit.
And what is
$1,400? $2,000 child tax credit, $1,400 of it is going to be a refundable credit if it should wipe out your liability completely.
That's awesome.
Which would be the refundable child
Right,
tax
which we
credit.
got to wait to see all the income limits for.
And I will tell you, I'm thinking about adopting children because if you have kids, that's the best thing. The
Under
tax brackets
17
will be 7 brackets, still as before. They've moved up the break of the brackets so that most people are going to end up with a tax break percentage for the income that is taxable under each bracket. For the top bracket, they're going to save about 3%. So you figure that somebody making a lot of money is going to save maybe $30,000 to $40,000 in taxes at the top. For me to say that this is a middle-class tax cut, I can't say that it's true, especially for people who have children over the age of 17 or that have employee business expenses, but they have kept into the law a lot of things that were really important, like the medical expense deduction, which I thought was so important, at least for 2 years. Now, I don't know what happens after 2 years, but one thing I have learned about Congress is usually when they put a cap on the number of years, they start extending it after that.
Yeah.
But that was a big thing, that medical expenses for seniors who are paying so much wouldn't have been deductible. Now it's still in effect through 2018.
And the reason you were so concerned is when it was first written, it wasn't there. They had taken it out, and so
Right. I mean, they basically said, too bad, too sad. We don't care. But you pay, if you're paying $100,000 to a nursing home,
Yep.
and you have to take $100,000 out of your IRA in order to fund it. The IRA was going to be taxable. The deduction for the nursing home was not. It was just going to be a travesty. So for those of you that called your congressman and said to them that's not fair, it wasn't fair.
Yep.
It really wasn't fair.
And one other thing, I know with seniors you got the medical, but gambling. Have you seen? Are they taking gambling?
Nothing. I haven't seen anything on. Now I know that the miscellaneous itemized deduction is subject to 2%. The whole shoot match is gone. Okay, The miscellaneous itemized deduction not subject to 2%. I haven't seen anything. So we're going to have to wait until the law is.
That was a
formally
text
written.
in from one of our callers, and so it's just sort of in a holding pattern, wait and find out.
Hey, I'm Esther Golias, the tax lady from EG Tax. Our offices are going to be open on the 17th. First day of electronic filings, the 19th. Remember, if you're somebody that doesn't have health insurance and in the past you've just kind of ignored it and sent in your tax return electronically, your return will not even go electronically unless you answer those questions about your health insurance. If you owe the penalty, you have to pay the penalty, but there are a lot of exceptions to penalty. So those people that don't have health insurance, don't be dismayed. Call EG Tax. We may be able to get you into one of the exceptions to penalty so you don't have to So you can answer those questions to file electronically, and it's not going to cost
Esther,
you
did I
anything.
hear that in the new tax reform, it's not going to be a penalty if you don't
That's
have?
for 18.
That's
Yep,
for
I
18.
know, but right. Yep.
Well, there's no mandate.
Okay.
No mandate.
Gotcha.
Right?
And we're here till 4:30 today, so
Oh, yeah, today, because we got bumped back for a half hour.
for the Little Rock.
Little Rock.
Yeah, which was a wonderful thing. for the
Yep,
Little
yep.
Rock.
So those people who are going in church now who usually wait till we're done, I'm sorry.
Pray for us anyway.
Yes.
Pray for us anyway. When we go back to the phones, we're going to talk to Stacy. Hi, Stacy. How can we help you?
Yes, I wanted to know, are the Social Security and pension deductions still allowed on the state form IT 201?
See, here's the thing. We know what's happening with the federal. The state of New York has to come up with some kind of amendments to reconcile to the federal. Right now, and remember, we're talking about 2017 is going to be due April the 15th of next year. That's all that's no change. So federal and state is still in place. 2018 going forward, which will be due in 2019, that gives the state of New York a year to come up with everything. But I would assume that the state of New York is going to follow federal, and they're going to come up with something to reconcile the difference in the standard deduction federal to state. Okay?
All right, thank you.
Thank you, my dear.
You know, and that's
I mean, I was talking a lot. I said a lot of stuff.
Yeah.
In other words, I think it's not going to be any change.
right. Well, you know, New York, it's not just New York, it's all the other 43 states that have state income tax now have to go back and rewrite their laws to correspond with the federal.
Now, remember, the state, your sales tax, your property taxes are all going to be deductible in 2018, which is in 2019, up to $10,000. So if you pay no New York State taxes, but you have sales taxes because you just bought a new car, and you have property taxes up to $10,000, it's still going to be deductible. So yay for us.
Oh, there's a caller trying to get in.
Okay, let's go back to the phones and we'll talk to Kathy. Hey, Kath, how can we help you?
Hi, Esther, my favorite tax lady. I have a farm, and you are my tax lady. And are the deductions on farms going to change?
No, I mean, anything, there's like, where the big changes took place were for dependents and exemptions and itemized deductions. Those were the big changes. Everything else stayed the same. So your farm that you're trying to make money on is still going to be deductible because it has a separate schedule, Schedule F. And so all of the deductions that were deductible in the past will stay deductible. As a matter of fact, they've kind of juicied up people that have small businesses, pass-throughs, which would be self-employed, rental property, subchapter S's. They're going to get a big tax break. So that's what's going to happen in 2018 going forward. But 2017, which we're going to do in January, no change.
Thank you very much.
You're very welcome. So I wonder what kind of farm she has. We should have asked her. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. And we have Eileen from Orchard Park. Hi, Eileen. How can we help you?
Hi, Esther. I have a question. I have some Series E bonds that have matured, and I don't know what to do with them because if I cash them in, I have to pay on the interest that I've earned. And right now, there's like $2,500 worth of interest alone. I don't know.
Okay. So let me ask you, how much what does your normal income look like? If you were to add, let's exclude the $2,500. What does your income look like, Eileen?
64, and I want to make an appointment with.
Does that include is that Social Security or all wages?
Oh no, I'm 64 years old. So and let's see, I was.
Are you single?
I am.
All right. So basically, you're going to pay.
I would say I have probably about. My income is somewhere between 35 and 40.
Okay, so you're basically in the 15% bracket. Okay, so you're going to pay taxes of $475 if you cash in those bonds. Okay, but the thing is, once you pay those taxes, then you have the ability, and interest rates are going back up. Okay, to invest those bonds in other vehicles. If you don't cash in those bonds, which you have to anyway at some point in time, then you're really paying 100% in taxes because you're not making any money at all. So the money you're not making, it's as if you're paying 100% in taxes. So I would encourage you to cash in those bonds, pay the $475. There's going to be nothing on the state of New York, and then invest it into something that'll make more money.
Okay. Do you have time for another question I have?
Sure.
Okay. I have a Roth IRA was in a My RA with the government.
Yep.
I know, and there's not anything. There's only $2,000 in it. It's probably less than 5 years old. It was just I had a couple bucks in my pocket and I threw it in there. Now I have to do something with it. And should I, at 64 years old, should I open up a Roth IRA or should I throw it into an existing 401?
Okay, well, you can't throw it into a 401 because that's something where you'd be working.
Okay.
So you can roll it over into another IRA if you'd like. But why would you pay the taxes on it if you don't need to pay the taxes?
Okay.
So, I mean, I've always been of the impression, of the persuasion, that you should defer paying taxes if you possibly can until you absolutely have to pay taxes because they're messing around with the tax code all the time. Many people always thought, oh, the taxes are going to go up. We see tax rates are going down. So people that had paid taxes on a traditional and put it in a Roth actually overpaid their taxes up front, not to mention who knows how long you're going to live. So I'm of the persuasion myself is to defer.
We got to take the news.
Defer and die. So, all right, we're gonna break for the news. I'm Esther Gulius, the tax lady. 8030930, 8030930, star 930 cell phone. See you on the other side. That is not Christmas music. I'm Esther Gulius, the tax lady. We need Christmas music 9 days before Christmas, right?
Frank's going, no more Christmas music.
Well, that's because you guys start listening at Thanksgiving.
Yeah.
You know, I don't listen. I love Christmas music. It's just that, you know, there comes a place where it's an overkill, right?
Definitely.
Hey, and this tax season, we have our show that's going to be, is it Tuesdays or Wednesdays?
Thursdays.
Well, there
is
you
it
go.
Thursdays?
Tuesdays.
Oh, it's Tuesdays.
I thought it was Tuesdays.
Oh, Tuesdays at 8.
I thought it was Tuesdays.
You're
I don't know.
right.
And it's really a great show where we answer your tax questions. And anytime, remember, we're here every Saturday all the way through tax season, and we'll answer your tax questions. You can call EG Tax anytime. You can go to our website at egtax.com and you can type in your question and we'll get back to you right away.
Yep. And
right?
before we get back to the phones, we had another person text in, my husband is in sales. No more mileage, gas, or car expense deduction.
Where?
How about the office and home?
Where?
It's really, I don't know how, really. I don't know why somebody doesn't do kind of a class action suit because I don't see how, if you're self-employed, you can take those expenses, but when you're an employee, you can't.
Yep.
It seems absolutely wrong to me, and I hope somebody challenges the federal government because I don't see how you can say one group of people who are earning money can take those expenses, but another group of people who are also earning money, who unfortunately are employees, are stuck not being able to make
But for the person who texted that in, that's absolutely correct.
Absolutely
what he used
correct.
to be able to
I
deduct,
would be
he will
really
not be
mad
able
if
to.
I were you.
You know, a couple things he can do is first
go to his employer
and switch from a non-accountable plan to an accountable plan. Maybe take a little pay cut, but then you're getting reimbursed. So that could work out in your favor.
Right, because if you're on an accountable plan, that means that you send to your employer a list of all the expenses you incur, and then they reimburse you. So in the past, if it's been something that's been your own burden and you've been able to take it as a deduction on your tax return, if you go to your employer and say, hey, I'm going to end up getting shafted here, will you change me to an accountable plan? and work out the numbers, and we will help you to work out the numbers with your employer so that they maybe give you a little pay cut, but you're getting now reimbursed for the expenses you didn't have before, which is going to be a non-taxable event. Then you end up with the same total income, but you don't have to worry about the loss of the deduction as a miscellaneous itemized deduction. We will help you with that.
Right, and then the second option could also be possibly turning into a statutory employee if he's a true outside salesperson and he gets all the leads himself.
It's not, it's not like up to them to turn into a statutory. I mean, there's very specific,
reasonable,
right, things that they
but
have
maybe
to do
they'll
to be a
widen that. Ha
statutory
ha
employee.
ha.
But that's really, really important. So for those of you that are out there traveling around in your car and you get reimbursed or you don't get reimbursed, that's a big deduction for you. And give EG Tax a call because we want to help you to work with your employer so that you don't get on the short end of the stick, right? Let's go back to the phone, and then we're still going to talk about before we end the show. And again, it's today at 4:30, so it's unusual, but there was the commissioning of the battleship, so we were a half hour late. So we're going to go to 4:30 today. Let's go back to the phones, and we're going to talk to Marty. Hey, Marty.
Hi. Good afternoon.
How are you?
I'm pretty good. I was just curious. I fall in that category of a partially disabled, low disability income, and I'm able to claim the earned income credit.
Okay.
And I was just curious if you know anything of that for the upcoming.
You're good, Marty. You're good. You have children that live with you?
No,
So you're a single person?
Yes.
Okay, so in Marty's situation, he has a disability pension because he's under the age of 65 that is considered wages, and so he gets the earned income credit. They have not touched that. So you're
Yay.
Good. Okay, so that's good.
Okay.
All right, that's free money that I was glad to get.
Yeah,
Absolutely.
but you do
Federal
something
and state.
good. You're disabled and you work, so kudos to you.
No, he doesn't work.
No, I thought he said he worked a little bit. No, it must be his pay is rolled into wages. Got it.
Right.
The limit.
Okay.
Yep, that's fine.
I'm glad for you, Marty. And let's go back to the phones and we'll talk to Jim. Hey, Jim.
Nope, we got Pat from Florida.
Oh, Pat. Pat from Florida.
Hi. I'm calling because on my taxes I get the PSO deduction, public service officer.
Sure.
And you can deduct up to $3,000.
$3,000, right?
Medical.
And is that still in the new one?
Yes, that hasn't changed. Basically, they kept all income the same, and the only thing they were looking at was itemized deductions, and actually, most itemized deductions are still back in there. There's some caps and some limitations, but everything from an itemized deduction standpoint has stayed in there, and so your $3,000 public service deduction that was deductible in the past will stay in there.
Fantastic.
All right.
How's Florida?
By the way, do you live in Florida, Pat?
Agree, something like that.
Pat, do you live in Florida?
Yes.
What part?
We're about an hour above Tampa.
Okay, so you were in Hurricane Irma, right?
Well, we were up in Buffalo at the time, but
do you have property?
Yes, and it missed.
All right.
It missed.
Did you suffer
It
any
missed,
loss
he said.
from Irma?
Excuse me?
He said it missed.
So you didn't have nothing happened to your property because of Irma?
We dodged a bullet.
Oh, that's great. Well, for those people that are listening from Florida,
or if you know anybody, Pat,
or anybody or Texas that were in a named hurricane, you have special provision from the Internal Revenue Service 2 days ago, so that you can take a casualty loss for what wasn't covered by insurance. And your floor is only going to be $500. You can amend your 2016, or you can put it on 2017. So it's a great big deduction. So if you know people that did get hurt, make sure you tell them that they have a casualty loss.
Oh, okay. Well, because there are a number of homes in our development that had tree damage onto the homes and that, and
well, tell them they have a casualty loss. There's very few people that know about it. It's a recent revenue ruling changing and revenue procedure. So if you know anybody that was in Irma's path, they get special treatment.
Okay. Thank you.
All right.
Hey, Esther, the person texted in, thank you for answering. Maybe we should sue them, start a class action suit.
Well, I have to tell you, I don't see how they can say that if you're self-employed, you're entitled to employee business expenses, et cetera, office and home. But if you're an employee and you're suffering those same expenses and your employer's not reimbursing you, that you can't take it as a deduction. I think it's certainly something that should be brought up, and
Me
you should
too.
think about a class action suit.
Definitely.
All right? And then who else do we have? We have Dave.
Oh, hi, Esther.
Hey, Dave.
Merry Christmas ahead of time in case I forget.
Thank you.
And great show you have. I listen to you constantly.
Thank you.
What I had two questions I had. One question was, what is the new tax? Did that tax ruling pass? And then what is going to be my my deduction? Like $7,500 now for a single person.
Over 65.
Okay, so right now your personal exemption is $4,050. And how old are you?
I'm 67.
All right, and so
I work.
All right, so you got around $12,000 because you were over 65. You're going to get $12,000 because you're single. So in your situation, seniors are definitely not going to reap any benefit for being over 65 when this bill passes. Now, it's been reconciled between the state, between the Senate and the House. So everything that I read, they're ready to pass this on Monday or Tuesday of next week. So it's not going to be negative for you. It's going to be pretty much revenue neutral. You may end up with a small extra 2% taxes on the bottom line because the bottom line is at 12%. You might have been at 10%. But I think you're going to find that it's not going to be anything to jump off a bridge over.
Mm-hmm. Okay. And then, thank you very much for that. And then the other question is, there's some, there's two or three people that I work for, and, you shouldn't be advertising. They pay me cash. I work hourly for them, and they pay me cash. I've never received, like, what you call it, a 1099.
Mm-hmm.
So is it possible they could send me a 1099 if I work hourly cash?
See, when you receive cash and the person paying you is not sending it into the Internal Revenue Service, what's happening is that they can't deduct it on their tax return, and you are not claiming it on your tax return. Quite frankly, it's fraud between the two of you.
Right.
So I would encourage them to issue you a 1099, actually a W-2 because you're an employee, and they should take it against their business. And so just because they're doing it incorrectly doesn't mean that that's the right thing to do.
No, I think they know what they're actually doing. But
well, they may know what they're doing. The only trouble is if you all get caught, you're all in big trouble.
Yeah, I don't get. I've asked for a W-2 form, but they don't hold no taxes out. So
well, they should. They're supposed to match your FICA. Yeah. And if you get hurt on the job, Dave, they're in big trouble.
Right, and even if they're not reporting it to you, you should put it on a Schedule C.
That's right.
Yeah, but
I was thinking that.
This isn't a permanent.
I know, but you're calling and asking if it's taxable. It is taxable. It is deductible to them. The two of you guys are committing fraud, and Merry Christmas.
Okay, good to know that. I won't do that no more. I won't do it no more.
No more coal in the stocking.
Yeah. Okay, I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break, and we're going to be back with what you can do in the next 9 days to cut your taxes for 2017. I'll see you on the other side.
Those the Beatles?
Christmas song.
No.
Wow, that doesn't sound like it's beginning to look a lot like Christmas.
Hey.
I'm Esther Goulias, the tax lady, 8030930, 8030930.
So
there
was a text about somebody who's committing fraud. I know you guys can chime in, but there's a place on the IRS site where you can actually fill out an IRS form to report fraud that you are
you can
being
call
perpetuated or going
1-800-829-0433
And
if
you-
you know someone. It's the whistleblower line.
Yeah, and you could call us at the office, and we'll give you that number Monday through Friday, too.
Hey, let's talk about, before we get to the phones, 8030930, 8030930, star 930 on your cell phone. If you're in business, you have 9 days to buy things. Let's say had a great year. If you think you're going to buy something in January, buy it now. That's a deduction, right?
Mm-hmm.
Because you get the deduction up front.
Especially if you're a
do
21
a limited liability company. If you're a small business, there's almost no reason not to do an LLC to help to mitigate getting lawsuits. So it's so simple to do. Do an LLC. Maximize your pension contributions and make sure you match your contributions before year end. If you're an employer, you want to make sure you get all those deductions in. If you have an employee match, get that in before December 31st. And then the pass-throughs are a big thing. So in 2018, if you have a small business, if you have a subchapter S, they're going to allow you to pass through rather than at the higher rate, at a lower rate. And so you want to make sure that you tax plan so that you're aware of how this is all going to happen for you. Remember, 2017, which we're in, is going to be the same during tax season. But when you come into our offices, we're going to say, this is changing, this is changing, this is changing, that's changing, this is changing. And so we're going to give you a snapshot of how your tax return will look the next year so that you can plan.
That
right?
Planning is key. It's so funny. One of my clients, she walked out of the office after I did her return last year with an $8,000 tax bill because she got some bad advice from a stockbroker. Now she's come to see me 4 times this year, which is great. But you don't want to learn a lesson that way.
That's true.
Yeah.
All right, so before we get to the phones, let's talk about things you can do in the next 9 days. Accelerate your deductions. I know they say medical's going to stay in effect. They haven't voted on it yet, but I will tell you, if you got lots of medical and you've already hit that threshold, pay up medical before the end of the year. Write your check. Property taxes. If you haven't paid your property tax bill, it's going to be, we know that next year that your property taxes, state sales taxes, your property taxes up to $10,000 are going to be deductible on 2018. If you were going to let any of it hang over, put it on 17. Get it into 17.
Right.
So
Maybe you have more than
for sure.
10,000. Pay it
That's
some
right.
now.
And especially those of you that have second homes, you're not going to be able to deduct the property taxes on your second home. So, get those in there. Sales taxes. A friend of mine last night picked me up for a dinner, and they had a brand new Mercedes. And I got in their car, and I said, boy, you got a great big sales tax reduction. I said to my husband, wow, we're getting picked up in a chariot. He said it was such a good deal, they couldn't pass it up. But the sales taxes are still deductible through 2017 and 2018, as long as it doesn't exceed the $10,000, right?
That's right.
New York State withholding estimates. Again, if you're somebody that's paying New York State estimates, pay them before December the 31st because you get the deduction through 2017.
Yep.
And same thing with charity. This is a great time of year to become benevolent. And you get the deduction. Clean out your closets. Make sure you have pictures and lists of what you gave, that they're good, usable items. And SalvationArmy.org has a really good website for values. You got to really save those receipts.
Yeah, you really. I know, for instance, Chris and I are going to Goodwill because we have a whole mess of dishes to drop off. So you should take pictures and lists and things like that,
Wonder how you got those dishes.
I wonder, from my mommy.
From your mommy. All right, casualty losses. There were lots of bad things that happened this year. The flooding in Lake Ontario, the hurricanes in Texas and Florida.
And Puerto Rico.
Casualty losses are, they're doing all kinds of things because people have suffered so much in casualty losses. You can amend 2016 and get the money right away, or wait till 2017. There's 4 ways of doing the casualty losses. Call us, we'll help you. People in Lake Ontario, big deduction. big deduction. Listen to Aunt Esther, big deduction. So make sure
Pay
you
attention.
do that. Casualty losses. Employee business expenses, those of you that are driving around in your own car, office and home, you're going to get super tapped next year. Take all your deductions as much as possible this year, because next year it's gone until you file the class action lawsuit, which I think
Well,
you
me
should
and
do.
that texter are going to do a class action suit.
That's for sure. And the other thing is with investment expenses. Those of you that are paying your stockbroker, too bad, too sad. 2017 is the last time you're going to be able to deduct it unless somebody forces Congress to reinstate that investment expenses. So the money that you're spending trying to make money that previously was going to be a deduction, you can't deduct anymore.
Looking for a job? No more.
Right. Looking for a job? No more. That's right. Business equipment, your cell phone, your laptops. Do it in 17.
Right.
Do it in 17. Maximize your pension at work. My gosh, if you haven't maximized your pension at work, you got 9 days to put the money in to reduce your tax liability. And this is the high tax year. Next year, the rate will be lower. So it doesn't make any sense that you'd wait to 2018 when 2017 you're going to pay at a higher rate. All right? And the other thing is tax plan. EG Tax will help you tax plan, and we charge that all kinds of money to do that, don't we, guys?
Zippo, nada.
Nothing. Kaput. We don't charge anything to tax plan because we want to help you. We want you to say, you know, you got to go see EG Tax. They are absolutely in your corner. Let's talk to Phil, who's been waiting. Hey, Phil, how can we help you, sir?
I'm on railroad retirement.
Yep.
And I qualify for a health care tax credit.
Mm-hmm.
Will that be going next year?
Yeah, I mean they have not taken away any of those credits. It's been, like I said, it's mostly itemized deductions, and it's really kind of boiled down to the miscellaneous itemized deduction subject to 2%, but most everything else is in there. So if you're somebody that was getting a credit because you were paying your health insurance because of railroad retirement, that'll still be in effect.
Would that be at 65% it is now?
They have not changed anything in that regard. Now, I will tell you, I haven't read all the law yet. I'm looking at everything that I possibly can, and nobody has said anything about it. So, you know, from what I can see, silence is golden.
I hear you.
Okay?
Okay.
All right.
And
thanks,
then
Phil.
I also wanted to say, don't forget we have several healthcare navigators who are at our office, and open enrollment is
going on now.
Going on now. So
actually, I think it's December 15th that ended. So.
All right, so just to kind of recap, so if they pass what they're going to pass, $12,000 standard deduction, single, $24,000 had a married filing jointly, you're going to lose the personal exemption. Children under the age of 17 are worth $2,000. They're going to allow you to take $1,400 as a refundable child tax credit. If you have somebody else that's a non-child, that's your dependent or a child under the age of over the age of 17, you're going to be able to get $500 for that dependent. All of the itemized deductions and adjustments are still in place. Teachers' deduction stayed in place. The interest on student loan interest is still in place. Alimony is still in place up till 2019. In 2019, all alimony is not going to be deductible. Alimony received won't be taxable on those divorces. Itemized deductions are still going to be deductible for medical, property taxes, student property
Interest.
taxes, real estate taxes, sales taxes up to $10,000, mortgage interest up to $750,000. Charities are deductible. Miscellaneous itemized deductions are going to be kaput, and I don't know about the other ones, to tell you the truth yet. So 7 tax brackets. All the tax brackets are lower. What else? What did I miss? Oh, a sale of personal residence. They were talking about 5 out of 8 years. It's still going to be 2 out of 5 years with $500,000 tax-free. If you're married filing joint, $250,000 single.
Child tax credit going up to $2,000, refundable up to $1,400.
Right. Anything else?
Did she mention adoption?
People? Yeah, and the personal exemptions are kaput.
Yeah.
So that's what's really going to hurt people that that have children over the age of 16 because you just don't get deduct $4,050.
I know they did say
whoever came up with this scheme, this tax law thing, they were really smart cookies.
Right. I know 529 plans starting in 2018 you can now start using for primary school and high school, where before it was just college.
That's the whole thing is, so you're putting $10,000 away that's going to grow tax deferred. It's not that big of a deal.
Right. You save a little bit on New York, but it helps.
Right. That's true. Every little bit helps. But I'll tell you, during the week, if you have any questions, you can call us at 632-7886. Our new website is up.
Yep.
And our new app is up. And all of our offices will be open on the 19th. On the 17th. On the 19th, e-file is up. By the way, nobody's going to get refunds for earned income credit until after February the 15th. And by the way, if you're looking for early money, we are able to give you up to $2,500 this year
with easy advance, possibly.
With easy advance, so that'll help people that are looking for some extra money with their tax refund. And again, there's no fee for interest that we charge. We eat that, right?
Yeah.
Yep.
All right, well, until next week, which will be the day before Christmas Eve, I'm Esther Golias, the Tax Lady, with Tiffany Fabian, Christopher Fabian. If you need us, we're at egtax.com. We want to help you. Call. We will help you. Have a wonderful week. Get that Christmas shopping done. Merry Christmas. Happy Hanukkah. God bless. Bye-bye.